In this lecture, we will continue our comprehensive problem. In the last section, we had finished up to 425. We're going to move on to the next section, and in order to do so, we're going to need to unhide some of our cells. So notice we have up top A, B, C, D, E, K, and it's not in order there. So there's some hidden cells between E and K that we're going to unhide so that we can see some more area that we can enter data on. So in order to do that, I'm going to put my cursor on the E so you can see that arrow drop down like so. I'm going to left click and I'm going to highlight over. Go as far as you want. L is far enough. And then let's go. And then I'm going to put my cursor on that selected area, right click and unhide. Unhide. So now we can see these other cells that we are going to work with at this time. Now these cells over here, we've looked at these already. We can now hide these cells if we so choose. I'm going to so choose to do so. And then if there's a problem, we'll have to go back to these cells if we have a question about it. But until that time, we can hide them for this time. So I'm going to put my cursor on the B, see that drop down, and left click, highlight over, and we could go all the way to F here. And then let go. Then put your cursor on the selected area and hide. Alright, so we're going to start on the next transaction, which is also going to be on 425. But we are down here on this second transaction here, where it says we sold merchandise to RHB, company terms 210N30. So we're going to go a little bit faster here because these will be similar transactions. We're just going to finish out the month, and of course much of the transactions will be much the same because we are in the same type of business. So we sold merchandise in this case, and we're going to record the sale. We got the sales price and we have the cost. First, we want to record the sale in the same format as if we were a service company, not thinking about inventory, then record the inventory. So is cash affected? No, we sold it on account. That's why we have the terms. We didn't get cash. We got instead an IOU, which I'm going to record accounts receivable. Still an asset. Asset's still going to go up. We're going to make it go up by doing the same thing to it, which in this case will be another debit. So I'm going to copy the accounts receivable, paste it in H5, right click, paste in it, 1, 2, 3, values only. And the amount that we are going to receive in the future will be the sales price, not the cost. For sales price, 22.6 in this case. I'm going to record the related credit, not thinking about inventory yet. There's going to be a credit related to this, negative 226. And what are we going to credit? Well, if we made a sale, just like if we did work, we earned revenue. So where's our revenue count? It goes assets, and then liabilities, and then owner's equity, and then revenue is here. We call it sales in this case because we sell stuff. So it has a credit balance. We're going to make it go up by doing the same thing to it, which will be another credit. Sales pretty much always goes up. It's almost always credited. So I'm going to copy that, put our cursor in H6, right click, and paste it 1, 2, 3. Now, I want to think about the second half as a separate journal entry. So this is the new thing from the service company that we have to deal with, inventory. So if we think about inventory, we can see that it has a debit balance. If we sold some of it, it must be going down. How do we make something go down? We do the opposite thing to it, which in this case is a credit. So I'm going to copy that. I'm going to skip a couple rows. I'm going to skip a line so that we have a different cell, a different journal entry separated. Then skip another line because the debits go on top and the credit goes on the bottom. So in H9, right click, paste it, 1, 2, 3. Going to go in the credit side of this. We're going to credit for the cost. So a negative 13,560. We're going to have a debit related to that as well for the same amount, 13,560. And the only question is, what will that debit go to? And that's going to be our new expense account. Why is that an expense? Because we are using the asset in order to help us generate this revenue in this time period, which is the definition of an expense. The expense being cost of goods sold. So that's our most important expense, although it doesn't have expense in the language. We can see all our expenses down here. There's cost of goods sold. It's an expense, therefore it has a debit. It generally only goes up in the debit direction. So we'll copy that. I'm going to put that in H8 on top, right clicking in and pasting 1, 2, 3. Now we're going to post this journal entry to the general ledger. So I'm going to scroll over here. Going to make it a little bit smaller. I'm going to go down to the taskbar down to 70 or so. And we're looking for the accounts receivable. Accounts receivable here on the trial balance. Accounts receivable is down here on the general ledger. We are in the debit half of it in this case. So I'm in O31. I'm going to say equals, point to the 22.6 in I5 and enter. Accounts receivable goes up And we can also see that happen here. And of course, we're out of balance until we record the other side, which is going to sales. Sales is our income account down here. We can see it in the income section of the trial balance. It's in blue. Therefore, we'll look for the blue accounts over here. Here's a sales. Notice it only has credit balances because sales only goes up. We're currently in AB16. We're going to say equals and then point to the sales, which is this 22.6. What will happen to sales? It's going to go up. What will happen to net income when we hit enter? It should go up as well. So let's do that. Sales goes up 42, income up to 29,880. How are we calculating net income? The credit, which yes, Excel sees as a negative number, but we see as a credit, minus the debits, means that the credits, the good thing on the income statement, because it's revenue, are winning 29,880. Now we're going to record the other half of this, which is the cost of goods sold. Cost of goods sold on the trial balance is down here, and it's in the blue section. So we're going to look for cost of goods sold. It's a little bit out of our view. It's over here, cost of goods sold. I'm going to scroll over to see it. We're going to need a debit, so right there. I'm going to do it a little bit differently. I'm going to use the equals, and instead of pointing with my mouse, I'm going to start using my arrow. And notice it's okay until I hit enter. It's just going to change. It's not going to mess up the formula. And we're going to go to that 13,560 there. We could see the formula here. We could see it's an I8 and enter. And there it is. It made the cost of goods sold go up by 25.2. If we scroll back over here, we can see that that also happened here. That brought net income down. Why? Because income went up by the sales, went down by the cost of the sales. Net effect, it went up 9,040. Now we'll record the merchandise. It's on the trial balance right here, third account. So it'll be the third account on the general ledger, which is right there. And we're going to say that equals in T13 equals and point to that 13,560, making the inventory go down. So there's the inventory at 230.92. There it is on the trial balance. Also note that we hit the accounts receivable account here as well. Therefore, we want to see the accounts receivable activity in the form of date, but also in the form of by who owes us the money. So in order to do that, I'm going to go over to the AR subsidiary ledger, and you don't have to do this, but I'm going to do this. Notice we're out of balance down here because this doesn't affect, or it's not the same as what's on the general ledger. And who owes us the money? I think it's RHB. So we're going to go in to the debit section and say equals, and then go back over here, and we're going to say that's the 22.6 and enter. So they now owe us 28.6. Now we're up to 56,000 of people who owe us money by customer in this case, and that will tie out to the general ledger here, which will tie out to the trial balance here. All right, let's take a look at the next transaction. I'm going to go back down. I'm going to go back up to 90% on the taskbar. I'm going to scroll back over. I'm going to click on the next date section, and we are now on 425 again. Last 425. Sold merchandise. Sorry, we're down here. We're on purchased merchandise on account from W Company. All right, so we purchased more merchandise. Pretty straightforward activity. And we're going to assume that we purchased it. We did purchase it on account. So is cash affected? No, we paid on account. Therefore, accounts payable is affected. Now, oftentimes, accounts payable, we have a harder time. Many students have a harder time to see which way it should go. We could go through our questions to know that, but it might be easier to think about what we bought to determine if we should debit or credit it. First, we bought inventory. Inventory is an asset. We've worked with assets probably more often. Therefore, we can see it has a debit balance. We know that it's going to go up by doing the same thing to it, which in this case is a debit. So I'm going to copy that. I'm going to put that on H11, right click and paste it 1, 2, 3. And the debit will be here. And how much did we pay for our merchandise? $22,150. So we're going to have a debit there, and then we're going to have a credit of the same amount, $22,150. So now we can see that we're going to credit the payable without having to think through it. But let's think through it. Accounts payable, it's kind of like the bad account, means we owe people money. It has a credit balance. It needs to go up because we owe people more money. Therefore, we need to do the same thing to it, which in this case would be another credit, which is what we know we have to do because we debited the inventory. So let's copy that and post that out in H12, paste in it 1, 2, 3. There's the transaction. We can go over and post this journal entry to the general ledger at this time. Going to make this a little bit smaller on our taskbar to 70%. We're going to post this merchandise here. It's the third account on our trial balance. Also the third account on our general ledger, we're buying more of it. We got the debit side of it. I'm in cell C14. C14, or S14, sorry, S14 equals the 22,150, bringing the balance up like so. Then we're going to go to the accounts payable. That'll be the second account. Accounts payable is down here. It's our first liability account, which is orange. So we can see the orange accounts over here. We're down here in X17. We're going to say equals. It's in the credit side, pointing to that 22,150, making this 60,000 go up in the credit direction to 82,150. Now, we're also going to have to record the fact that, or I am, you don't have to, but we should record the fact that we also want to see who we owe by who we owe, not just by date. So we're going to have to know who we owe. We're going to have to track that on the subsidiary ledger. So I'm going to go over here to the AR and AP subledger. Here's the AP subledger. We're out of balance like this, and we're going to go to W company. I believe is who we owe them in the credit side of it. We're going to say equals, going to go point to the general journal, look for that accounts payable. There's the new activity. All we're doing is recording the same activity, but instead of by date or order of transaction, it is now by vendor. That puts us back in balance. These are the vendors that we owe money to. Adds up to 82,150, which should tie out to the general ledger, 82,150, which should tie out to the payable account on the trial balance. All right, so let's do the next transaction. We're going to make this a little bit larger once again. Back up. Oh, I'm going down. Back up to 90. And then we're going to go to the left-hand side. We're on now the 428. So we're on 428. And it says we have a cash sale. So we sold something for cash this time, not on account. This is like our favorite transaction, by the way, for the most part, because we sold it and we got the money at the same time. So is cash affected? Yes, it is. We sold stuff and we got money for it. So cash is a debit balance. We're going to make it go up by doing the same thing to it, which in this case would be a debit. So I'm going to copy that. We're going to put that on top in H14. Right click, paste it, 1, 2, 3. The amount will be for the purchase price, the sales amount, 19,000. And again, don't start thinking about inventory yet. Just think as if we're a service company first and then think about inventory. So if we were a service company, we sold service and got money, then the credit half of it would be for 19,000, and that would be income of some kind. So where's our income account? Well, it's assets, then liabilities, then equity, then income, which we're calling sales right now because we sell stuff. Could call it income, could call it revenue, but it's in the revenue section. Therefore, it's the revenue account. We could see that it had a credit balance. We're going to credit it to make it go up. And remember that revenue basically always goes up. So here's our favorite two journal entries just to represent the fact that debits and credits can be good just where they're at. The debit's good, it's making cash go up. The credit's good, it's making sales go up. So debits and credits aren't inherently good or bad. It just happens to be one's on the left side, one's on the right side. So now we're going to record the other half, the merchandise. So merchandise inventory is going to go down. So it has a debit balance. We're going to make it go down by doing the opposite thing to it, which in this case would be a credit. So I'm going to copy the merchandise inventory. I'm going to skip a row, skip another row because it's going to go on the bottom, and put it on H18. So I'm going to right click and paste it 1, 2, 3. I'm going to put that on the credit side because it's going down. And how much did we pay for it? We paid 11.4, so 11.4. So if we credit 11.4, we're also going to have to debit 11.4. And this is the new accounts, oftentimes the most complicated account to people that are just learning inventory, and that's going to be the expense related to us using the inventory called cost of goods sold. So it's an expense because it's us consuming an asset in order to help us generate this revenue in the same time period. So there it is. Its expenses have debit balances, so we're going to make it go up by doing the same thing to it. Expenses always go up, and there it is. So what's the effect on net income? It's going to go up by the sales, then down by the cost of the stuff we had to give up, cost of the goods that we sold. So the net increase in net income will be 7.6. All right, let's post this out. So I'm going to move this over here. We're going to scroll. I'm going to make this a little smaller on the taskbar, back down to 70. We're posting out the cash first. So here, cash, that's our top account up here, of course. So we go to the general ledger. It's the top account on the GL. So we are in 015 equals, and we'll point to that 19, which will bring the cash up from 64,328 to 83,328. Then we have the sales on this side. So sales is here on the trial balance. It's in the blue area. So it's going to be over here somewhere on the general ledger. And there we see sales. Notice they only have credits here because sales only goes up in the credit direction. And we are in AB17 equals, and we're going to point to cell J15, and that will make sales go up in the credit direction, 61,000. Makes net income go up, of course, as well. Then we'll go to the cost of goods sold here, and that is going to be located here on the trial balance. So it's in the blue area. And once again, that's a little bit out of sight. It's right over here. So I'm going to scroll over, and we are in AE12 and say equals. I'm going to use my arrows again this time. I'm just using my arrows, and it's okay. You notice the letters are changing as I go. That's fine until we hit enter. I'm going to scroll on down. There's what I want. There's that 11.4. Now I'm in I-17. I'm going to hit enter, and we can see that the cost of goods sold went up. Always does because it's an expense. For the most part, there will be an exception, but there's it right there as well. Now we just need to record the other half of it. So here's the inventory side of it. Here's inventory up here in the trial balance, the third account. Here's inventory over here. We are in T15 equals, I'll use the arrows again. We're going to go over here to 11.4 and enter. Inventory goes down. In that case, we're back in balance. The effect on net income being, once again, the sales less the cost of goods sold. All right, let's go back up to 90% on the taskbar. Let's scroll over to where our questions are at. And we are now on 428 again, I believe. I'm guessing, but let's go. So we have the 428 received cash from RHB for invoice less discount. So first question, is cash affected? And yeah, it says we received cash. So cash has a debit balance. It's going to go up by doing the same thing to it, which in this case would be another debit. So I'm going to copy that. We're going to paste that up top. That'll be the first part of our transaction. And then we've got this question, of course, once again, how much did we get? We got this business of, well, here's the original invoice amount. Here's how much we received. Here's the discount. They told us how much we received in this case. Future problems may not. So let's do the calculation just for future reference. 6,000 is the original invoice. We're going to give a 2% discount, 0.02. Therefore, 120 will be the amount of the discount minus the 6,000 means that we're going to receive the 5,880. Again, we can calculate that, and it could be handy to know that we can calculate that with one transaction with 6,000 times 100 minus 2%, 0.98%. That's how much we cash we're going to receive then. So let's go up here and put that up here. We're going to say, I'm going to do the same thing. I'm going to do the calculation by saying equals, and it was 6,000 times 0.98, just so we could see that calculation in the Excel sheet. So then why do people pay us? Because we did work, and we did work in the past, however, so we're not going to credit sales. We're going to credit the receivable. People owed us money, and now they paid us. We already know that we're going to credit it because we debited cash. Receivable has a debit in it. If we credit, we'll do the opposite thing to it, which will make it go down, which makes sense because people no longer owe us that money because they paid us for it. Right click, paste it, 1, 2, 3. So the amount though is not going to be the amount we received in this case. It's going to be the amount of the original invoice. And again, why would that be? Well, we included the full amount here showing that people owe us that 6,000, not the reduced amount 5,880. If we don't take the full amount off, it'll show that they still owe us money. We can see that more clearly if we go to the ledger over here and look at who owes us the money. And so if we scroll up, here it is here, that 6,000 right there. That's from an invoice in the prior period. Then they owed us another 22. Now they owe us 28.6. We need to take off the full amount of the 6,000 of that invoice, or else the amount of the discount will be remaining. Therefore, we're going to take the full amount of 6,000 off, and that means that our debits do not equal our credits. So if we subtract that out, we got 120, the discount amount, being the amount that we need to debit. I'm going to show that with the negative sum function, which will just subtract and then flip the sign. So negative sum of those 4 cells. There's the 120. If I highlight all these cells now, 6 cells, they now add up to 0. So we have it correct. Then we need to record what the discount will be. And in this case, it will be sales discount. So remember, sales was overstated when we recorded it. We don't want to reduce sales with this debit, even though it would reduce sales because we don't like reducing sales. We make a contra sales account called sales discount, which has a debit balance, basically reducing the sales. So we're going to copy that. We're going to paste that down here in H22. right click and paste it 1, 2, 3. Going to make this a little bit smaller, back down to 70 so we can post this out. I'm going to scroll back over here. First account being cash. Cash will be our first account on the trial balance, first account on the general ledger. Here it is down here. We're on the debit